Hey traders, Raghee here, and in this free video we're going to cover a setup that we use today to trade the ES, and it's something that I think a lot of times, especially if you're focused on intraday trades, there's a real easy, obvious trade that oftentimes intraday traders will omit, and that's the end of day chart. Now that might seem like a weird jump. You know, how do you know in terms of time frames which ones to focus on? Well, for us it's a pretty easy decision, and it's easy because we have a way to understand what the price movement may be in a particular market, and that means we use the AutoChart platform to understand something it's a unique tool. It's something that I've never found a replacement or even an equal to, and it's a historical price movement range assessment. Now, many of you who have either attended the free webinar that I did about 3 or 4 weeks ago and watched me explain how to use price movement ranges on daily and hourly charts, will find this something that you're already pretty familiar with, and some of you are already using this. Well, this is how it works. Intraday, I'll be looking at price action, especially after the open, like what I would see 9 to 10 o'clock and what I would see 10 to 11 o'clock. And you can see the low, the average, and the high. Now, once the market breaks these support levels, in other words, there's a support level that I calculate based upon those price movements. And once that price level is broken, so let me give you a great example. And this is where, you know, I talk to my traders in the room. I say, look, if there's a loss, we talk about it. Because on the other side of that loss could be enough price movement to set up another trade. Well, I'll give you an example. The loss that we took this morning on the S&P, I think was somewhere in the vicinity of 2 to 4 points, I believe. It was a minimal amount considering the volatility. Now, some people would say, well, Rog, 2 to 4 points. That's a lot. Well, the range comes from how aggressively you want to play the buy in the morning when the bell rings. So later on in the day, as the market continued to melt down, and I still have a bullish bias because I still feel that by and large, the sellers do then get squeezed. So for my traders that want to focus on the next level out, we start to calculate price levels like this. Well, at 118, and if you want to check your charts, you can see what that meant. But at 118 today, we sent out an alert based upon the daily. And that daily alert was about this range, as you can see, that I calculated based upon the daily price movement ranges. And that ultimately became the buy that we took at 118. I think it triggered about 4 or 5 minutes later. And it's not an intraday setup, it's an end of day setup. So what I want to encourage my traders that are listening right here, or if you're curious as to how to use this kind of information, how do you take a short-term time frame, maybe loss, readjust and wait for that next opportunity, like a great batter at the plate waiting for their pitch. And this time, instead of a pitch swinging by, going by on a 1 minute chart, it did on a daily. And it set up a tremendous bounce into the close that I actually feel we could continue to see. And for my longer term traders, heck, this could be an entry that we will take for the next few days. Tomorrow's non-farm payroll should be an interesting release, lots of volatility. I don't know that there's going to be sellers out there that are going to want to do much by way of selling unless that number is a dramatic miss. And remember, the FOMC has themselves, back in the Yellen years, established a 100,000 job per month sort of baseline, that they will not veer their hawkishness unless we persist below that 100,000 job a month line in the sand. So that's going to take some doing to really disappoint the Fed and veer them off their trajectory. And as long as they feel that's a healthy growth number, the market's going to feel that's a healthy growth number. So my lesson here for everybody is think about the time frame, shift when necessary, know both your hourly and your daily price movement ranges, and these kind of moves can absolutely be the kind you could recognize when the rest of the market's panicking, or worse, starting to short, you know where to get opportunistic and get long. I'll see you in the next update.